who are settled abroad like you all. So, and I hope everybody's safe and happy. So let me share today's agenda. So this webinar is divided into 3 sections. First, introduction of Max Life and what are the unique proposition which Max Life is offering. Second is why investing in India is a great opportunity for NRIs and OCIs. What are the available options and their benefits along with the tax implications. The third section will be question and answers round that we'll take it at the end. So whatever questions you have, you can put it on the chat box, right? We will give you a time to put your questions. And so let me introduce today's main speaker. We have Mr. Dinesh Mantri, who is a qualified chartered accountant, and he's heading NRI business for Max Life. He has an experience of more than 17 years in insurance industry, and he has an expertise in NRI business. So with this, I would like to invite Dinesh, and I welcome you all once again. Thank you. So over to you, Dinesh.
Yeah, thank you, Archana. You are able to hear me, Archana?
Yes, Dinesh, loud and clear.
Okay, great. Thank you so much. Namaskar, everyone. Thank you and good evening to all our guests, our agents, and our distributors, and all customers from Middle East and various other countries. It's a pleasure to be there in front of you. As Archana has mentioned, our webinar will take around 40 to 45 minutes, and then we will spend around 15 minutes for question and answers, and if you have any, and then this webinar will be divided into 4 different parts. One about the organization, one about the reasons why a lot of non-resident Indians are investing money in India, and some of the options where these the instruments where non-resident Indians and OCIs are investing in India. We will be sharing many of the options in details, and as I mentioned, if you have any questions, feel free to use the chat box and post your questions. Thank you so much. Uh, Let me start this webinar by introducing our organization, which is Max Life Insurance, and it's a joint venture between Max Financial Services. It's a listed company in National Stock Exchange and Bombay Stock Exchange. It's a $2 billion group, Max Group, and it's a organization which deals in life insurance in India. The other partner of the organization is Mitsui Sumitomo Insurance, which is a Japan-based organization leading general insurance in the world, and it is present in 39 countries, over 120 years of experience in general insurance. So that's a little promoter details about Max Life Insurance. The vision of Max Life Insurance is to be the most admired life insurance company by securing the financial future of our customers. It is a very important thing that we do not want to be number 1, number 2, number 3. We want to be most admired, which means that when a person looks to buy a life insurance or good to invest money in a life insurance policy, the first name we believe should come as Max Life in their mind. That's our vision, which we work. All our acts, all our work is directed towards accomplishing this vision. If you look at our value system, our values are caring, collaboration, customer obsession, and growth mindset. The number 3 one for all of you as customers is very critical, very important for us, which is customer obsession. We always believe that whatever we do, we are mad about the benefits which we want to our clients and customers. Whatever is possible in the within the law of land, we will be doing, which will be for benefit of our customers. That's all our this is our values of Max Life. Let me go to the next slide, which talks about little brief about what Max Life is and how are we doing it. So if you look at, we are into 20th year of operations, and we have around 300 offices across India. However, now it doesn't matter because we are on digital platform, and all of you are not living in India. We which means that you really require a digital process of doing every transaction which with Max Life. So we have complete digitalization in all our processes. Um, Third, we have around 14,000 employees and 60,000 agent advisors who are distributors. Our asset under management has rose to 68,471 crore rupees over last financial year. Yeah, we are among the top 25 companies to work with in India and number one in life insurance space. So this is very, very important from customer satisfaction, because if the employees are doing well and employees are happy, they will definitely take care of the customers and they will look after customer services. Our claim settlement ratio is the highest in the country, which is 99.22%. And we are among the top 10 best fund managers in India, which includes life insurance and mutual funds and other fund managers. Our gross written premium has increased to 16,184 crore rupees over last year. We have a sum assured of 9 lakh crore rupees, which is our insurance value which we have given to our customers. If you go to our next section, which talks about how much asset under management we have done. So if you look at asset under management, our asset under management has grown over last 10 years from 10,000 crores to 68,000 crores. And you look at the way it has grown, it is all about trust which our customers, 40 lakh customers, have put in the organization. If I talk about that is the point about how much claims we pay to our clients and our customers and to the nominees of the customers. So there are two kind of money which we pay back to our clients. One is at the time of maturity when he lives till the policy end, and one in case of an unfortunate event of death. At that time, every eighth minute, we pay one maturity claim to our client. In every 30 minutes, we pay one death claim to our clients, to the clients and to their nominees. So that's how we are giving the money to our clients. If you look at our claim performance over last few years, in the bottom chart of the presentation in front of you, it says that our claim settlement has risen every year, and now it stands at 99.22%. We have a unique benefit which we give to our clients and their nominees, which is insta claim. We pay death claim in 1 day time, up to one, if the policy has completed 3 years and up to 1 crore of sum assured, which is insurance value. And if the documents are being submitted by 3 p.m., we pay the same day a death claim to the nominees. In case, if for any reason we are not able to pay the claim, we will pay a daily interest on that money to the nominees. That's a promise which we give to our clients. So that's a brief introduction about the organization which we represent. Let me go to another section which talks about why and how much non-resident Indians are investing money. uh, I don't have to tell you, I'm sure all of you do it, and you send a lot of money to India. However, from a holistic point of view, I am going to share with you some of the statistics which is given by World Bank, which talks about how much non-resident Indians sends money to India. India has been the number one recipient of non-residents, money over last 30 years in a row since 1980s. Last financial year, which is 2018, the 2019 data has not been released, but 2018, India has received 79.5 billion US dollars overall in the year 2018, which is really very good. And there are many reasons why you send money to India, because your families are back in India, you want to do some investments in India, and many, many other reasons. Your personal reasons, it is all about your motherland, and therefore you send a lot of money back to India. Let me share with you why a lot of non-residents are investing money in India. Is because the kind of returns and the GDP growth which India is showing over last so many years, this has been tremendous run in the growth of the organization, or of the country. If you look at India's GDP growth over last few years, India has been growing at very fastest rate in the world. Due to this pandemic situation, almost all the economies are not doing well, including India. However, IMF, which is the world's largest fund manager, which is International Monetary Fund, has predicted that India will be the fastest growing economy once again, just after the situation becomes normal. Now, if you look at from a corporation's point of view, big organizations and companies, they have a very positive outlook towards India. Uh, Positive outlook, so much so that large value organizations are investing huge amount of money in Indian economy. You name the top 10 organizations of the world, be it Apple, Facebook, um, Saudi Aramco, um, uh, Google, Microsoft, Walmart, every other organization, Apple, every other organizations are investing money in India every year. So, and in this during pandemic time, during the quarter 1, which is April, May, June of the year, India has received the highest amount of foreign direct investment from the large value corporations, which clearly showcase that there is a very positive outlook when when money is invested by foreign companies in India. So that's a positive thing about Indian economy, not only in current situation but also in past and going to be in future as well. Now, let me come to the important part, which is you and me, individual. How do we invest? We spoke about corporations, very positive outlook, but we need to also look at uh, what about individuals? Individuals like you and me, where do we invest money? Now, if you look at our as an individual, where do we look at investing money? We invest in four different asset class. We invest in four different asset class. Now these four asset class, I'm sure you will agree with me that there are four different asset class where everyone invests. One is equity, one is gold and silver, another is real estate, and the fourth one is guaranteed products. Now, look at equity. I'm sure all of you would be, whenever you are looking to invest money, you would be looking at these four options of investment. That's everyone does it. There are some benefits of each asset class. There are certain drawbacks of each asset class. When you look at equity, equity is a very high returns product, but it comes with high risk. There is a risk of fall, there is a and there is a reward for investment. It gives you high liquidity if you want to really uh, you know uh, if you want to redeem the money. If you look at metals, gold and silver, a lot of individuals invest in gold and silver, and now if you look at metals, it is trading at very high rate. In fact, equity as well. Gold and silver are very good investments because they are hedged against inflation and the equity prices, but they are also subject to market conditions. Silver price can go up, silver price can come down, gold also similar way, and they are having good liquidity in case you require money. Real estate is another investment which gives a rental income for many years, for generations as well. And it also gives you appreciation of money over time. But it comes with a lot of maintenance cost. It comes with a lot of ownership cost. You have to pay property taxes. You may have to pay a lot of maintenance cost. And there are certain taxes which you have to pay, certain challenges which you have to do if you are investing money in a country where you do not live. So I will share that in detail in subsequent part of the webinar. But I think it is important for you to take a decision on real estate after understanding all the aspects related to it. The challenge of real estate is it is not very liquid. It cannot be sold overnight. It cannot be sold in a week's time. When if it is, then we do not get the right price which we really require. The fourth kind of asset class is guaranteed products like bonds, mm, fixed deposit, bank deposits, and other products like those. These products gives you lower rate of return than other instruments, but it gives you guarantee, it gives you safety of money, and it gives you peace of mind. It also gives you a guarantee rate of return because it will tell you and while investment, that this is the kind of return you are going to get. Now, all four asset classes are important. All four type of asset classes are different. Now, you may say, okay, I want to invest in gold, silver, all my money. It is possible, but it is not a good asset allocation. Appropriate asset allocation is a must for each individual, whether you are more towards equity, less towards guaranteed products. But if you don't invest in one of the asset class, it becomes a challenging situation in certain cases, like in current situation. If I would have invested all my money in real estate, or if I would have invested all my money in equity, and during this time I will require money, I may got less amount of money than I would have invested. So it comes with risk, and therefore proper asset allocation is important for everyone, each individual and each family. Now, let me share with you some of the important things when it comes to investment in India and abroad. Uh, all asset classes I will talk about one by one. One is Indian equity market. If you look at Indian equity market has outperformed almost all the world equity market in the past. And I've taken a data of 15 years, 20 years, and this is a long period, I know, but it is important for us to understand the equity, how it behaves and how it works. Equity always goes ups and downs and ups and downs. And if you look at 15 years data, Indian equity market, Bombay Stock Exchange, against in compared to bigger equity indexes of the world, like FTSE 100, which is London Stock Exchange, New York Stock Exchange, Dow Jones of US, S&P 100 of US, Nikkei 225 of Japan, Hang Seng of Hong Kong, and Straits Times of Singapore. They could be sorry, there could be many other stock exchanges where we could have made the presentation with, but due to lack of space we have not mentioned that. It could be Abu Dhabi Stock Exchange, it could be other Toronto Stock Exchange, and many other exchanges which we could have added. However, we haven't done it because of this lack of the space. But if you look at comparatively, you look at Indian Stock Exchange, which is Bombay Stock Exchange. Indian equity market has outperformed all equity market of the world. If you look at 15 years data, 13% is the approximate rate of return which equity market of India has given, in comparison to around 3% to 6.5% across all the other equity markets of the world. And you look at 20 years data, which is real representation of how equity market behaves. In year 2000, there was a dot-com bubble, market came down. Then 2001, there was a big impact in New York buildings, and market came down. Then it was again went up. Then in 2008 financial turmoil, then it came down and again went up. So all ups and downs, and that's how equity market behaves. And there, Indian equity market has returned around 11% in comparison to around 0.5 to around 4.5% across all other equity markets of the world. That's why a lot of non-resident Indians are investing some part of their equity investments in India. That's the reason. Because Indian equity has always given you very high returns. When it comes to gold and silver, I'm sure all of you must be investing some part of your money in gold and silver, which is metals. Gold gives you almost equivalent return wherever you invest, except for little differentiation because of the currency fluctuations. But gold gives you approximately same rate of return. Even if you invest in Dubai, you are investing in India, you are investing in Kuwait, or you're investing in US, wherever, the rate of return becomes almost same. Silver also behaves same. So it doesn't matter wherever you want to invest, whether dematerialized or in paper format or in physical gold. If you look at the real estate, the third kind of investment, it is again a different kind of asset. Um, you require lump sum value, but real estate returns are different in different kind of areas or places or cities or countries where you invest. If you invest in India, India also have various cities, various places. The rate of return in real estate depends on different kind of reasons and the places where you invest. So hardly you will not find any comparison to that, but that's a good investment to do, subject to certain costs, which I have to mention in later part of the webinar. The fourth investment, which is guaranteed investment. As I mentioned, guaranteed investment is something which is gives you safe, which gives you a peace of mind, and it it gives you a guarantee rate of return. You know what is the rate of return you are going to get. So you know that at the time of investment I am going to get X amount of return. But if you look at rate of return in various kind of countries, various countries, and comparison to what India gives you, India gives you around 5.5 to 6%. However, in other parts of the world, US, UK, UAE also, if you look at the rate of return is very very low in comparison to what India gives. I understand in current situation the interest rates have come down in various countries, including India. However, still the gap is very high, and that's why to take better return out of their investments, a lot of non-resident Indians are investing money in Indian, guaranteed products. And I will share with you some of them. Where do they invest and how do they invest money? Not just banks, and there are many other investment options as well. Uh, so if you look at the other slide, the next slide, if you go, and you will find that we will talk about some of the options where not of non-residents and residents also are investing money. I will share this with a story, because that will help us understand more in detail and with more clarity. Um, so the question is, sorry, the story is of a small family which consists of Mr. and Mrs. Ram, who has two children, and it's a complete family. The story goes like this: that Mr. Ram and Mrs. Ram, they work together very hard. They earn a lot of money, and they spend a lot of money on their children's education. I'm sure this would be the similar situation in your family as well. In some of the countries, the children education is free of cost, is on the state, is on the government, but it depends on different kind of countries. However, we still spend a lot of money on our children extra co-curricular activities, like their badminton, swimming, their soccer, or their hobbies which they want to accomplish. So Mr. and Mrs. Ram worked very hard and spent most of their earnings for their children education. Now, they met an advisor, and the advisor asked few questions. The advisor asked few questions to this couple, and the question was, don't you think, Mr. Ram, that this is the time that you start saving for your retirement as well? So this couple says that I want to save. However, the cost of education is so very high that we are left with little amount of money to save. So the next question which the advisor asked is, if you're not planning for your retirement now, then this is a very important question, and you should ask yourself this question if nobody has asked you. If you are not planning for your retirement now, Mr. Ram, would you be okay to ask your children for your household expenses once you retire? I am sure your answer would not be a different than what this couple would have answered. Couple has answered, how can I am 100% sure that I won't be comfortable asking money from my children at the time of my retirement. That's how everyone behaves. Now, if you look at the next question, which this advisor has asked, Mr. Ram, if you had one more child, Mr. Ram, if you had one more child, would you have been giving this third child the same amount of the fees which you are giving to your other two children, or you would have given the same level of education which you would have given to your other two children? So answer would be definitely yes, 100% I would be doing this. So Mr. Ram, how much money do you spend on your children, on your children's education? So Mr. Ram says, I spend around 2 lakh Indian rupees on my children's education. So it depends. It's just a conversation. It's a representation. It could be different for you. So Mr. Ram, now I'm asking you to adopt one child, and this child is your retirement plan. You fund this third child also with the same fees you pay for your other two children. Mr. Ram, this third child has only one responsibility. This is to take care of you and Mrs. Ram in your presence and in your absence. Irrespective of whether you are there or not, both couple will be taken care by this child, and that's the only responsibility this child has. The other two children may take care of you and your wife, but this child has only one responsibility, and this child is nothing but your retirement solution. You need to take your retirement solution in such a way that it is like your third child. That's what the conversation is. So we have different kind of solutions for our clients, which we share with our the non-resident clients. And one of the solution which we share, which a lot of people actually look at, is called as monthly income advantage plan. When you go to the next slide, I'll be able to show you how it works. This is a representation. There are multiple options. There are multiple ways you can actually look at it as a product. But the way it looks like is, this is an example of 15 years payment options. So Mr. Ram invested 2 lakh rupees of, every year for 15 years, as if he is investing money for his third child. And after he is turning 50 years, and he start getting money every year, year on year, and that money is a guaranteed amount of money which we will share at the time of when you take the investment, when you book the investment. So when you book the investment, we will tell that this is a guaranteed amount of money which you will get from this product, and the money will not change irrespective of the change in interest rate in the market. The money remains same. And after 10 years, there is a lump sum value which will almost be equivalent or little higher than the amount of money which you have invested in overall. So you invested around 30 lakhs, and the money at the lump sum value will be given around 36 lakhs. The second benefit, and this is, I'm sure you will say, oh, this is a normal, this usual a retirement solution, I understand. But there is another thing which I mentioned, that the third child responsibility is take care of you and your wife, whether you are there in your presence or in your absence. So in this product, there is a life insurance also applicable. I'm sure you would have taken a lot of life insurance policies, but life insurance here, it works in a very different way. The in case Mr. Ram is no more during any time of the investment, let's say after 3 years he does not invest money, or he is no more. So in this case, what will happen is, at the time, a lump sum value will be paid to the family for their immediate requirement, and that's how all life insurance policies work. But now, when I mentioned that it will take care of the wife as well, what will happen is the company takes over this policy and this investment, and invest money as if Mr. Ram is alive. So rest all the investment which Mr. Ram was supposed to do will be done by the company, so that the guaranteed income which was supposed to come to the wife will come as it is without any change. And a maturity benefit, a lump sum benefit at the end also will come to the wife, as if everything was going on normally. So this makes sure that it is complete comprehensive solution, not only as a usual retirement solution, but it also take care of the wife and your husband in all kind of circumstances. A lot of people look at this kind of investment option for their retirement, and therefore it gives you a comprehensive solution. There are many options available in this product as per your choice, as per your requirement. You can pay for 15 years, you can pay for 12 years, you can pay for 8 years, and multiple options available for you as per your choice. When you talk to your advisor, if you are interested in this kind of retirement solution, I think this is a good solution to be in. So once you discuss with your advisor, he or she will be able to guide you and recommend you a right solution for you. That's the one product which a lot of individuals who live abroad, they invest in. Now I have another, another story for all of you, which is also very, very important. It's about a person who actually retired at the age of 50, 20 years back. And this is a story which is actually, not very different than truth. So this person retired 50 years back, which is year 2000, and he invested 1 crore rupees, which he got from his job, which he got from his savings in so many years of work life. So he invested 1 crore rupees in year 2000 in a fixed deposit, which usually people do invest money. Now what happened in year 2000, if I recall correctly, when I was, I started my work life, um, That time the interest rate in fixed deposit was around 12%. So this person received 12% interest rate. But what happens in a fixed deposit or a bond? I'm not talking about just a fixed deposit. It is applicable to bonds and other products like those. So in this product, the bonds are only for few years. They are for maybe 1 year, 2 year, 5 years, maximum usually 10 years. What happens in that? This product is very good. The bonds, fixed deposits are very good because they give you guarantee rate of return. But the challenge in this bond is it is not the guarantee rate of for a very long period. After 10 years, and that's the maximum period you will find a bond will be or a fixed deposit is, at the end of 10th year, you have to renew this bond or of deposit. Now, when you renew the deposit, the rate of interest may change, and it's supposed to be applicable rate you will get. So if this person would have renewed this bond after 10 years, which is year 2010, the rate of interest at that time was around 10%. Now the interest rate went down for this person. And if this person would have got a 10 years bond at that time, again in year 2020, he would have actually renewed the bond, and current interest rate of a fixed deposit or a bond is approximately 5.7, 5.5, maybe 6% in some different kind of banks or a bond. Now the person renews this bond for again 10 years. I don't know what will be happening at the age of after 10 years, which is year 2030. I don't know, I cannot predict future, but looks like the trend line clearly shows that the interest rate is coming down. That's a challenge, and that's a real story of an individual who really look at bond for for their retirement solution. They are perfect products because they give you guarantee rate of interest. The money is safe, it's completely secured. But the real challenge is the life of a human being is has increased over so many years. Usually, people live till age of 85, 80, sometimes 90. Females live little longer, and therefore once you retire at age 60, you can only go for 10 more years, which is age 70. What about after age 70? What about after age 80? That time you will face this challenge of reducing interest rate. And the if when you go to the next when we click, it clearly mentions that the fixed deposits rate of returns is coming down. Now on the other hand, the expenses always are on rise. We have just represented the expenses with the cost of thali. When you come to India, you would have, you would have ate somewhere in the restaurant, or you would have ate in your home. The cost of thali is increasing year on year, and this is just a representation. I'm sure in your country, the cost of living would not be increasing at this rate, but it is increasing every year. Every year this rate is increasing. So the summary is the rate of interest of deposit and bond is decreasing year in year. However, the cost of living is increasing year by year. So if this person has relied on deposit and bonds, then he is in trouble, because he would have got a lesser rate of interest. So what to do in this situation? Let me also share with you that the expenses after retirement. I'm not retired yet. However, I have spoken to many people. I met many people who are retired, and they say, that when you go to the next slide, you will find this, that they say that they have to maintain lifestyle after retirement. They want money for maintaining their lifestyle. They want to fulfill their dreams, which they never had done when they were working, because they never got time. Many people say that they have to protect their health because the health cost is increasing year on year. Maybe you may have a health insurance, but there are co-pays, there are some other expenses which are over and above your health insurance. So for health, you may require a lot of money. And many people say, I want to give money to my next generation as a legacy. For all these things, you require a guaranteed amount of income, not only for 5, 7, 10 years. You require guaranteed amount of income for your lifetime, which means till the time you live. And that's a product which we give to our non-resident clients who live in Middle East and many other countries. So this is the product which we give. It's called as guaranteed lifetime income plan. As the name suggests, the product gives you guaranteed rate of return. It gives you lifetime income. And I mean to say my word lifetime. Lifetime does not mean lifetime of the product. Lifetime means lifetime of the individual who has invested. Now, I will explain you in detail. It has many other benefits like, early planning you can do for your retirement. You can do a legacy, you can give a, income to your spouse and many other flexibilities. But I will explain you in detail with the example which will help us understand how this product helps a person in their retirement life. So this is a story of an example of Mr. Sangwan, who is working in in his employment and is around age 50. Now he has a lump sum value because he saved a lot of money during his time of work. He saved a lot of money and now he wants to plan a retired life. He has got 1 crore rupees, let's say as a lump sum, which he wants to invest and look forward for a retirement income. Now, he invested at age 50 around one, you know, crore rupees. It's a representation. Everybody can do at their own, amount which is useful for them. Now, at the age of 60, when he retires at the age of 60, he will receive 11 lakh 27,100 rupees every year from age of 60, year on year, every year till he lives. And I mean to say he lives means whether he lives till 75, 85, 90, 100, maybe 120, or maybe 150, that doesn't matter. What matters is till the time he lives, this amount of money is going to come to Mr. Sangwan, even though whatever is the interest rate or whatever the change of interest rate happened in the market. That's how this product helps the family to get a guaranteed amount of income. Now, after the demise of Mr. Sangwan, if his spouse is also living, which mostly chances are that it is possible to have because females live longer than males. You look at your society and you will find among old age people, you will find many females. Genetically, they live longer. Now, she wants also money for her dignity, for her lifestyle, and for her living. So therefore, we will give the same amount of money, which is 11 lakh 27,100 rupees, not 1 rupee less, not 1 rupee more. Exactly same value we will give to her till she lives, till the time she is living. The day when she is no more, that time we will add up 5% to the initial investment of 1 crore. That is, the amount will become 1 crore 5 lakhs, and we will give this money to the child as a legacy so that he looks after himself in his life. So this kind of product, this kind of investment option is very much lucrative, and it is more taken by non-resident individuals, because a lot of people who live in Middle East, they when they retire, usually they come back to India and they want their retirement income for their life after their retirement. So they invest a lot of money in this kind of product, and they get a guaranteed rate of return. Now, this has multiple options. I have given example of age 50 and then starting at age 60, but there are options available where you invest in 50 and you start getting immediately. You may start getting after 1 year. You may take an option of starting income after 5 years or maybe 10 years. As per your choice, you can choose whatever way you would like to have your retirement income. So this product is a very unique, very different than any other product you would have heard about in the Indian market or wherever in the world. Now, you can also look at the rate of interest. It is really very good, and that too for lifetime. You will not find these kind of products usually, but this is specifically for people who have a lump sum value to invest in. So therefore, a lot of people who are age bracket of 45 to age 70, maybe who has just retired or going to retire, or has retired some years back and has got a lump sum value, they invest in this product. The another way to look at this product is those people who are living abroad, however they have parents in India, they also send money for their parents lifelong income that will help them take the lifelong income, and after their demise the entire money can be given back to the child at in his own country wherever he lives. or whether he is in India, whether he is abroad. So that's how this product helps a lot of individuals who live abroad in making sure that they get rental income, or they get regular income year on year without change in the interest rate in the income. So let me go to another product. These are the two retirement products which a lot of individuals invest in. When you look at the product where you want to save money over period of time. So the earlier product which I mentioned was a product where you invest in lump sum and you get regular income. But there are many people who say, I don't have lump sum value, I want to save money year on year. Now what happens is, if I want to save money, some part of my money in a product which gives me guaranteed return, like a fixed deposit or a recurring deposit or a product like those, the same challenge as I mentioned earlier comes, that the rate of interest changes every year. So let me give an example. If I have some money and I want to save money, I want to build a purpose for myself, a lump sum value for myself, for my child's higher education, or for my child's higher marriage, or my own retirement, then what will happen? I need to save money every year. Now in that situation, I can invest money in guaranteed products like deposits, but the challenge is interest rate. So I go to a bank or I go to a bond dealer, I say, I have this amount of money, let's say 5 lakhs or a 10 lakh of value I have. What is the interest rate you are going to give me? They will say this amount of interest. Okay. Uh, Now I say I am going to save money next year as well. So what is the interest rate you are going to give me? The bank will say, or the bond dealer will say, whenever you come next year, that time whatever is the interest rate, that interest rate will be given to you, right? Now the interest rate, I know how the trend line is. The trend line is, it is going down. It is going down year on year. So what will happen is, the interest rate will may change, and therefore my interest rate will be lower than what I have actually invested in. And the third year when I invest, the fourth year I invest, I fifth year I save money, the interest rate keeps on changing, but my goals remain same. I need to save money for my retirement, I need to save money for my child's higher education, and other responsibilities of mine. So I want a product which can guarantee me the rate of interest, not only on today's investment but also for my future investment. And that's the product which we are talking about, where a lot of individuals are investing in. It's called as assured wealth plan. It gives you a guaranteed amount, or guaranteed rate of interest, irrespective of change in the interest rate in the market. They could be changing the interest rate, but the day when you book this product, when you start investing in this product, same rate of interest will be applicable on your future investment as well, whether you invest in for 8 years, 5 years, 10 years, as per your choice, whatever you want to choose. And the same rate of interest is applicable on every year's investment. And this rate of interest will be applicable almost equivalent to a bank deposit, and therefore this is much better product than a fixed deposit or a bond. It has a life insurance coverage as well, which is very good, important for the family. I understand you would have taken a lot of life insurance in your country, but life insurance is such thing which, in case of an unfortunate event, the family will never say that the money was I got higher money. So life insurance is always important. This gives you a life insurance. It also gives you a guaranteed amount of maturity, which I mentioned. There are multiple options available, flexibility of how many years you want to invest, how many years you want to, after how many years you want to redeem. So we will talk about that in detail in the next slide, which talks about what are the options available for you when you want to invest in this kind of product. So there are options of 5 years investment, and take out money after 10th, after 15th year. You invest for 5 years, you take out money after 20th year. You invest money for 8 years and take out money after 16th year. You invest money for 10 years and take out money after 15th year. You invest for 10 years for more money, taking out 20 years. Many permutation combinations are available, because every individual is different. They want different options, flexibilities for themselves depending on their own requirement. So let me give an example of how it works. If you look at 5 years payment, or and 20 years the maturity. Then what will happen is you invest. Let's say I just go to the previous slide, and you will find, yeah, previous slide, one more previous slide, one more previous slide, yeah. So you will find 5 years 20, and let's say you are age 40, and you are investing, let's say, 10 lakh rupees. So today only we will tell you, once you invest first 10 lakh rupees, in anyway you are going to save money after 4 years also, every year after the first investment for next 4 years. But today only we will tell you, on all the investments, you will get 1 crore 33 lakhs 24,450 rupees, not even 1 rupee less, not even 1 rupee more. This is a guaranteed amount of money, irrespective of the change in the interest rate in the market, irrespective of whatever happens. This amount of money will be given to you at the time of 20th year. That's how this product works. And I think in comparison to all bonds and others, this product is very, very lucrative and a better option available for investment. So these are the different products. Now I'm sure, if just go to the next slides, Archana. So if you look at, there are various other products. These are 3 products which we have mentioned, but there are various other products which we give to our non-resident clients, which are based off, which are equity based products, which are a health insurance product, which can be other life insurance products, which are dividend based and bonus based, various kind of products. We have only shared with you 3, because of the paucity of time. We will not be able to share all of you, all of them. But I'm sure, if something comes to your mind that I want to do something for my side, what do I do? My recommendation is, you should block time of the advisor who has invited you in this webinar, who has invited you over this this webinar on this weekend, and block your time about 30, maybe 40 minutes, and discuss your needs, your area which you want to save money for, maybe your higher education, maybe your child's higher education, maybe for your retirement, or for any other purpose, or just for the investment purpose. You should discuss with the advisor who has invited you. Now, as I mentioned in the first section of the webinar, about customer obsession, that's the value which Max Life looks at when it comes to customers. Customer obsession really is not just the name. We actually do that in our day-to-day activities. We we will, for non-resident Indians, there are certain unique things which Max Life does. It is important for you to get to know about this, because these are important things when you invest money in the country in which you do not live now. Um, so Max Life does everything which is possible under the law of land, and therefore we give you many options and benefits. One, you don't have to come to India for investment. You can invest wherever you are currently. You don't have to send any document to us by hard copy or courier or like that. Everything is digital. Not only digital in terms of new policy or new investment. uh, it's like, after sale, every process of Max Life is digital. Whether you want to send WhatsApp message to our customer help desk, whether you want to send an email, whether you want to have a customer portal, everything is available 24/7 on a digital platform. So you need not worry about whether the advisor will be advisor will always be there, but in case you require in case you require help over digital medium, they are always available. uh, Very importantly, you can send money in the currency in which you want to. So if you want to send money in Indian rupee, you can. If you send money in Kuwaiti dinar, you want to, you can. If you want to send in dirhams, UAE dirhams, definitely is possible. You want to send money in Omani Riyal, any currency where you want to invest in, you can send money. Now, at the time of redemption, you want us to pay back in your own currency, or you want us to pay in Indian rupee as per your choice, that flexibility we give to you. You may not have Indian bank account at the time. By the way, in any other instrument, wherever you invest in India, whether you invest in real estate, whether you invest in gold, whether you invest in bank, whether you invest in a other life insurance or in a mutual fund, whichever product you invest in India, you have to have an Indian bank account at the time of redemption. At the time of taking out money, you must have an Indian bank account. However, Max Life, we know that it may be possible that your NRE account or your NRO account is not operative. You may not want to do it, or you may not want to operate it, or you want money in your own currency. Absolutely not a problem. It is allowed by law. It is allowed by Reserve Bank of India under FEMA guidelines. It is possible for a life insurance company to send you money in your foreign currency as well. We can do that, even though you don't hold an Indian bank account. Lastly, important point. In fact, very importantly, that even though you do not buy a life insurance for Max Life, I think it could be useful for you whenever you come to India and you buy anything. You have to pay a goods and service tax. You have to pay a goods and service tax. Whether you buy a pen, whether you buy a calculator or computer, or you go out for lunch or dinner, or whatever you do, you have to pay goods and service tax. Now you are a non-resident of India. Now, when you are a non-resident of India, the Goods and Service Tax Act, the law says that you can ask the seller that you do not want to pay goods and service tax. So the seller can say, okay, however, you need to pay money from your NRE account. So the GST, goods and service tax, can be waived off. Max Life does that. All the goods and service tax which is applicable on a life insurance policy, we will waive it off, provided you pay all the money for this from your foreign currency, or you send money from your Indian NRE account. If you send money from your NRE account, the goods and service tax will be waived off completely. So that's a important thing. Whenever you come to India next time, you can always ask the seller that I have bought a 10 rupee pen and there is a 2 rupee GST. I don't want to pay that 2 rupees GST. Provided you give your address proof of foreign country, and you give money from your NRE account. All these, if you give these two things, your goods and service tax can be waived off if it is okay for the seller. So we do that. So that's an important thing which you should do. Now, if you look at, as I mentioned, in the webinar, that if if you want to do something and you want to invest some money, you want to have more clarification, I request you to block your 40 minutes of your time with the advisor who has invited you over this webinar, and the advisor will understand your requirements and will suggest you an appropriate solution which can be really useful for you. So that's all from my side in terms of this webinar. Thank you so much for listening to me. Thank you so much for taking out time. And over to you, Archana, for any questions if there are any.
Yeah, thank you, Dinesh. Thank you so much. A lot of questions are there. First question, again, we have to go back to why Max Life? How can you compare it with private life insurance company? So the first question is that.
Okay. Life insurance, as I mentioned, all life insurance companies are good. All life insurance companies are safe, secured. There is nothing to worry about, provided the product is not an equity-based product. If the product is a guaranteed product, nothing to worry about. Max Life is among the top life insurance companies in India. And as I mentioned, as a customer, if I am the investor, if I am putting my money, am I investing money in life insurance, I do not want a company. Maybe the company will be number one. Maybe other company is number two in their business. Maybe they are very good. They may be very bad. But I want a company which can actually look at my investment in a way which I want them to look at. Number one. Number two, the money should be safe. Now, I can say that in terms of all other organizations, uh, when I started this webinar, I mentioned about the value and the vision of Max Life. Our vision is not to be number one. Our vision is not to be number two or number three in sales. Our vision is to be the most admired life insurance company, which means that if a person wants to invest money, he should see, that this investment which he is doing, the company is looking at me and company is giving me that benefit which I require. So the customer service is what we are looking at, and as a customer I will definitely look at customer service first than any other thing. Security is always there, that's not a problem at all.
Thank you, Dinesh. What is if I pay the premium today from my NRE account and tomorrow I come back and pay from Indian resident account? Then do I need to pay GST?
Okay, that's a good question. Archana, I think it is important for us to understand the Goods and Service Tax Act. Since I am a chartered accountant, I can tell you about the Goods and Service Tax Act. It clearly mentions that if the person who buys a product in India and pay the money for this service and goods from NRE account, then the goods and service tax is waived off. Now, there are two conditions, as I mentioned. The person must be a non-resident, and the second, the money should come from foreign currency or from NRE account. If both conditions are fulfilled, then the goods and service tax is waived off, or it is zero rated, which we say in India. So, if the person comes back to India and then pay, definitely goods and service tax has to be paid. Secondly, the person may say, okay, I am paying for my NRE account. Let me tell you, NRE account can be holded only till you are a non-resident. The day when you come to India for all good, you cannot hold in NRE account. You have to convert to a Indian resident saving account.
Okay. So what are the tax implications if we get the maturity in NRO account or NRE account both?
That's a good question. Um, in India, the taxation on life insurance is very, very clear. It says that life insurance proceeds are completely tax exempted, whether you take money in an NRE account, whether you take money in NRO account, or you take money abroad, irrespective, wherever you take the money, the amount of money which you earn is always tax exempted completely.
Okay, so thank you. So as I'm very friendly with FDs, right? So the customer is saying, I prefer FDs. So how can you compare it with any of your product?
That's a very interesting thing. I know a lot of people invest in fixed deposit. They are good products, as I mentioned earlier. They are very, very good products because they give you safety, they gives you guarantee returns, they gives you safety of money. However, they give you liquidity. However, there is only one thing which they do not give, is a long term guarantee. Now, if you are not looking at liquidity, if you are not looking at liquidity for, let's say, 5 years, 10 years, or like that, and you want to save money for for an important goal of life, that is like child's higher education or your retirement, and you don't want to withdraw money for them from these investments, then I think the product which we mentioned to you was much better, because that kind of long term guarantee a deposit does not give. So the no as my personal recommendation, if you are looking at liquidity, then fixed deposit is the product. If you are not looking at liquidity, like your child higher education, I'm sure you would not like to withdraw money from the fund which you save money for your child higher education or your retirement. That, I don't think a fixed deposit would be a better idea. You require a long term guarantee, which life insurance product like what we mentioned can give you.
Thank you, Dinesh. And what are the tax implications on my FDs when I come back to India? Like from NRE account, the tax FDs are tax free. So when I come back to India, what will be the tax implications?
Very important question, Archana. I think from Middle East countries, if people are listening to me, I want to share this in detail, because many people have confusion on what will happen to NRE deposit when I come back to India. What about the tax implication on my deposits when I come to India? There is no clear answer. I also searched internet and lot of places, how, and lot of clients I have spoken to. Nobody has very clear idea. Let me share with you a very, very clear answer on this. You may say, okay, that's a good takeaway out of this webinar. Um Number one thing. So Archana, I have a slide for this. Archana, if you can help me with putting that slide, that will help. And this is a section which I have placed of Income Tax Act, Indian Income Tax Act. Number one, when you come to India for good, that's next slide, Archana. When you come to India for good, there are two things which happens. Number one, uh, can you keep your NRE deposit or FCNR deposit till the time they have been taken for? Number one question. Number two question, whether the income which you earn from these deposits are going to be tax exempted, tax free, or taxable. So we need to understand this in depth. I will try my best to give you a simple answer. There are two laws in India. Number one law is called as Income Tax Act, and number two law is called as Foreign Exchange Management Act, FEMA in short. FEMA determines the how foreign exchange has to be looked at for a person. Now, when you come to India for good, FEMA Act says either you can be a resident of India or you could be a non-resident of India. So the day when you come to India, in a reasonable manner of time, in a reasonable time, you have to declare to the bank that I am no longer a non-resident, convert my NRE or NRO deposit to a resident Indian account. That time period is called as is actually 3 months time. Is that time period is 3 months time. Now, therefore, you have to, if you do not, let me share with you the penalty. Uh, as per section 2 of FEMA Act, this law of resident and non-resident is mentioned that in the 3 months time you have to mention whether you are a resident or a non-resident. Now, the penalty if you do not change the NRE or NRO deposit to an Indian resident account is equal to 3 times of the value which you actually don't give to the country, which is India. So let's say you earn interest of, maybe example, 1 lakh rupees. The penalty is 3 lakhs for that. Wherever we can determine the amount of money which was lost to Indian government, 3 times of that loss is the penalty. If the penalty cannot be calculated, then the penalty is 2 lakh rupees. That's the law of FEMA. Now, next come to Income Tax Act. Income Tax Act says that your NRE deposits, returns from NRE deposits is completely exempted. Correct? We all know about it. Returns from NRE deposit is completely exempted, provided you are a non-resident as per FEMA Act. So this is what it is. According to section 10, subsection 4 of Income Tax India, it says that in case you are a non-resident, the income by way of interest on the securities which you have mentioned, like or NRE deposit, it is completely tax exempted. But it will be in accordance up. You can read the third paragraph about non-resident external account, in accordance with Foreign Exchange Management Act and the rules made thereunder. So it clearly means that once you are in India for good, and therefore now onwards, whatever interest you earn out of your NRE deposit is going to be taxable income of yours in that year and onwards. That's number two. Number three, about FCNR account. FCNR can continue because FCNR is in different section. FCNR interest is tax free. It is completely exempted, and even though you come to India as a resident, you can continue your FCNR account till the maturity of the FCNR, provided after the maturity you have, if you want to put the money in a foreign currency only, you have to open a resident foreign currency account, RFC account. So that's how it is. So I'll summarize it. The day when you come to India for good, you have to tell your banker in 3 months time that I am a resident, convert my NRE and NRO deposits or NRE NRO account into an Indian resident account. If you don't do that, the penalty is 3 times of the tax which you were supposed to pay on the interest of that deposit. Right? If the amount cannot be determined, the penalty is 2 lakh rupees. This is what about Foreign Exchange Management Act. You can go to any search engine or Google, where you can type Foreign Exchange Management Act, and you will find in Foreign Exchange Management Act, section 2 talks about resident and non-resident, and penalty. When you go a little in depth, it is not too long act. When you go to penalty, the penalty is mentioned in the first paragraph. FCNR account, you can continue till the time of maturity, and after the maturity you have to convert to RFC account if you want the money to be in foreign currency only. If you want to convert to Indian rupee, it has to be an Indian resident saving account. In terms of taxation, income tax will be levied on all the interest on NRE account also from the day when you come to India for good. If your banker or somebody else tells you that no, you can continue your NREFD, not a problem, for 3 years, 4 years, 2 years, 1 year, because you are a resident, not ordinary resident. It's called, there's a section, there's a something called RNOR, resident, non-ordinary resident. You can continue, and the rate of return will be tax free. Don't listen. Listen and read what is in the Income Tax Act. Don't listen to a person. Read what is there. That is what I'm mentioning here. So that's all from my side. That's now about this question.
Thank you, Dinesh. In one product, you have mentioned that in the event of insured person's death in GLIP, the benefits will be given to his wife, and in event of her death, the final settlement will settle to the legal heir. What if the wife dies before the insured person's demise? Will the legal heir will continue to get the same benefits as well as the final settlement?
So yeah, so that's a good question, and that's a good thing you have observed. If the spouse is no longer living at the time of the first annuitant, when he is getting the money, so after, let's say, the husband has got the money, and after that wife is also not there, then the entire lump sum value which I mentioned, which was supposed to be given after the death of wife, will be given to the child at the time of death of the husband only. So 1 crore 5 lakhs in that example will be given to the child as a legacy value.
Okay, thank you. So another question is that again on this guaranteed GLIP plan only, that we have to give our living certificate every, is that a
Yes.
condition?
Yes. So any annuity or income for life requires a living certificate, but don't worry, everything is digital. Need not worry about it. It's a very small thing. You can get this living certificate very easily. Not a problem at all.
So then there is one more question on currency fluctuation, that how will you settle that?
Which currency we are talking about, Archana, if it is mentioned?
Dollars.
US dollar. Okay. So US dollar, definitely this product is subject to currency fluctuation. However, still, after currency fluctuation, it makes sense for someone to invest money in India. And there are a lot of people who are investing still from the US also, and from UAE as well, who can invest in US dollars, but they invest in India in Indian rupees. It's not that all their money is invested in Indian rupees, but some part of their investment is diversified to India in Indian rupees and the products like these. Because if you look at the currency fluctuation of US dollar over Indian rupees, so if I give an example, yeah, I have a slide for this, Archana. If you can put this slide, look at US dollar, and I'm looking at little long term. I'm very logical in my calculation. There are people who are very emotional about it, that US dollar is going good. Absolutely is going good, but uh, whether it will go good every time, answer is no. Not, sometimes US dollar goes up, sometimes it comes down. All those things are there. uh, but if you look at long term, Indian rupee has depreciated. If you look at year 2000, 20 years back, the US dollar was 43 rupees. Today, it is 75, 76. Now, if you look at the depreciation rate, it will be around 2.8%. Now, in life insurance, when you don't invest in lump sum, you invest in over a period of time. Therefore, today when you are investing money, you will send an X amount of money. Tomorrow you will send, next year you will send less amount of money. Third year you will invest less amount of money. Fourth year you invest less amount of dollars. So we will average out. So the rate of depreciation will be around 2.3%. Now, if you look at, if you do not want to take this depreciation, you have to invest in US dollars. In US dollar, wherever you invest, let's say you invest in US debt, which is guaranteed product. Um, uh, Sorry, somebody has to stop this chat. Sorry for this. Don't mention your phone numbers, please. It is it disturbs a lot. Thank you so much. If you have some questions, please put that. My apologies for answering this kind of thing. Let me come back to the point. If you invest in US dollars, you will get a very less rate of return. uh, Maybe around maybe zero point 0.1, maybe 0.06. Different banks of US are giving 0.06, 0.20, maybe lower rated banks gives you 0.50. You have to pay tax in the US if you are investing in US. If you are investing in Dubai in the US dollar, you don't have to pay any tax. So no tax. But even then you will get zero point 0.5 maximum. When you invest in India, Indian debt, we will give you 5.5%. There is no tax neither in India, neither in UAE or any other part of Middle East countries. There is a depreciation of 2.3. You deduct 2.3 from 6, you still get 4 or rather 3.8%, which is much higher than you get returns in debt in a US dollar product. So therefore, logically, if I look at it, makes sense for a person investing in Indian market as well. Not all the money in Indian market, but it is important for diversification of assets. Diversification of assets is a very important thing. Over to you, sir. Archana, you have to unmute yourself.
Yeah, there. I'm sorry, it got hanged. So thank you so much, Dinesh.
Okay.
A lot of questions are coming. A lot of personal questions are coming. So what I would suggest everybody will be that we were able to answer some few generic questions which were for all. So what I would request is to fix up a meeting with the person who has invited you, and you can have one-to-one conversation where they will help you understand that which product would match your exact requirements according to your financial liabilities and according to your lifestyle. So that's it. So you can book a
I
meeting.
think there is one more question. Archana, sorry for this. I think there is a question which is genuine question and good question. Where is my money invested? I can look at the chat box and I can see it's a very good question. You should know where this money is invested. So we will share with you exactly where is your money invested. Let me tell you, from a documentary evidence, the advisor will definitely tell you where is this money invested. But uh, orally, I can tell that the money is invested in sovereign guarantee products, which is sovereign bonds of central government of India, state government of India, and infrastructure bonds. So all are AAA rated, the highest rating which a bond can get. Therefore, the money is completely safe, secured, and stable. You will get the same rate of return which has been mentioned in the document. Not even 1 rupee less, not even 1 rupee more. From a safety point of view and security point of view, you should not do any worry. From a documentary evidence purposes, we will share with you where is this money invested in.
Sure, thank you, Dinesh. And you know, every country has a different currency fluctuation impact, different tax implications. So I would again request all of you to book a meeting. So we have a PPTs according to your country, according to the tax implications of that country, and according to the the currency fluctuation of your country, where you will get to know that how investing in India with Max Life is a great opportunity and a better proposition for all of you. So that's it from our side. So thank you so much for coming. Thank you so much for joining in. So have a good day. Bye-bye.
Thank you so much and namaskar.